Bitcoin is rat poison squared. Warren Buffett didn't like Bitcoin because it doesn't have cash flow. This trips people up. How does Bitcoin have value when it doesn't have cash flow? And I have a simple way of thinking about it, which is to think of Bitcoin as providing a service. The service Bitcoin provides is the ability to store wealth in a digital format without relying on a bank. And there are evidently 50 people in this room that want that service. There are 100 million people around the world that want that service. When you think of it as a service, its value doesn't seem so unusual. We're used to companies providing services. Microsoft provides a service, Microsoft Word, Microsoft Excel. When more people want to use Microsoft's service, people buy those software and the price of the stock goes up. Bitcoin provides a service, the ability to store wealth in a digital format without a bank. When more people want that service, guess what? The price of Bitcoin goes up. The only difference is there's a Microsoft company that you can pay a subscription fee to get Microsoft service. In finance, and I will tell you that crypto analysts are absolutely terrible at valuing Bitcoin. They put up these ridiculous ideas. If you're a Bitcoiner, you may know of the stock to flow model. That is a theory in Bitcoin that the value of Bitcoin is related to how much new Bitcoin is produced. This would argue that the price of Bitcoin will go up forever. And I'm bullish, but I'm not that bullish. There's also this Metcalfe law argument that the price is a square of the number of participants. That would also argue it goes up forever. There's even this rainbow chart, which postulates that the price of Bitcoin bounces between purple and red, which is a terrible way to run your financial analysis. I pointed this out to people that rainbows go up and come back down, but Bitcoiners don't like to think about that. But it's a really bad argument. The actual answer on Bitcoin is the price of Bitcoin is set by supply and demand. The criticism that Warren Buffett has that Bitcoin produces no cash flow is the key to understanding Bitcoin. The price is set by supply and demand. And so I just want to give you a view on why I think Bitcoin is 172,000 Bitcoin is more than 164,000 Bitcoin. In other words, ETFs bought more than 100% of all the new supply. And what history of ETFs tell us is that the amount of AUM in an ETF tends to grow over time. The first year is usually the weakest year. This is a chart of the AUM in gold ETFs since they launched in 2004. And you can see that gold ETFs had a good first year. They attracted $3 billion in assets, but they did more in year 2 and more in year 3 and more in year 4. We're here in Bitcoin ETF land, and I think we will see more inflows into Bitcoin ETFs this year than we did last year. In fact, our prediction is we'll see about $50 billion in inflows. The next thing is corporations. ETFs aren't the only thing buying a lot of Bitcoin. Firms like MicroStrategy, Marathon, Tesla, Coinbase, Block, etc. are also buying a lot of Bitcoin. A dozen governments that own Bitcoin today, including the US. As a US citizen, you have a share in the US Strategic Bitcoin Reserve, which was created a few months ago. Every American owns $47 of Bitcoin, give or take, because the US government owns almost 200,000 Bitcoin. This was the Trump executive order that called for the creation of a US Strategic Bitcoin Reserve, and nearly every state has its own initiative to allow states to buy Bitcoin. We're seeing it around the world. There's the Czech Republic, Brazil, Japan. I think it's over 50 countries that are considering this. Bitwise is consulting with multiple sovereign nations about building their own Bitcoin reserves. There's a tweet from our CEO about that. And we think sources of demand are buying more than 100% of the supply. And what that means is existing people who already own Bitcoin have to sell it. And they're only willing to sell it at certain prices. So what have we seen? As soon as the ETF launched, the price ran up from 45K to 72K. And then it traded sideways for about 6 months. Why did it stop at 72K? Because 72K was the previous all-time high. And people are people, and there were people who were willing to sell at the previous all-time high. So remember, people have to sell because there is incessant demand from ETFs, corporations, and governments. So it hovered around 72K while people were willing to sell at that all-time high. And then it broke. And look what happened when it broke above 72K. It ran straight to 100. Why did it run to 100 and then stop there? Why is it each week? In February of 2011, Bitcoin crossed $1 for the first time. It was called Dollar Parity Day. And my team led an hour-long session on what Bitcoin was. And the person who led that session now lives in a very nice house in Santa Barbara. I left that room and didn't buy any Bitcoin because I had to get on with my day. And it's easy to beat yourself up for doing that, but the reality was in February 2011, there was a huge number of risks in the Bitcoin market. There was technical risks. This was a new technology. We didn't know if it would work. There were trading risks. Literally the largest exchange at the time was a PayPal address that you would send money to, and they would send you Bitcoin in 48 hours. I looked at the terms of service for that. You can find it on the internet. It's called New Liberty Standard. It says this may be legal as far as I know. The largest custodian in the world was Mt. Gox, which collapsed a few years later. The government didn't know. Yeah, we have a question over there.
Do you think Ethereum, Solana, Ripple, Cardano will be as successful as Bitcoin?
Oh, great.
Or do you think Ethereum will be in future the next Bitcoin?
Great question. I'm gonna do 60 seconds to get everyone in the room up to speed on what the difference is, and then I'll answer your question. This drives people crazy. There's 17,000 cryptocurrencies in the world, which sounds ridiculous, and is ridiculous. But I want you to not think of them as cryptocurrencies. I want you to think of them as crypto assets or even software companies. The reality is that every crypto asset is two things. There's Bitcoin, the asset, on Bitcoin, the blockchain. There's Ethereum, which is the second largest crypto asset, on Ethereum, the blockchain. And the blockchains are just pieces of software cases, and you'll have to ask someone smarter than me which one you should buy.
Hi, Matt. It seems people have the alternatives between the ETFs, which is relatively safe, or to own it via Coinbase, or buy the Bitcoin and store it in cold storage.
Yeah.
But it seems that the BlackRock and Bitwise, and correct me if I'm wrong, I think 90% or 100% of your ownership is in the custody of Coinbase. Do you own Bitcoin in any other form outside Coinbase, in your own version of cold storage? And is there I know Coinbase, there is some sort of insurance for the retailers up to a certain level, but isn't there the idea of placing most of your eggs in the Coinbase basket? And maybe Coinbase is a great stock.
A fantastic question. So I would actually say I would break apart.
Or like Spain just had a blackout. So
yeah,
what do you do in situations like that? And I want to know, do you have any? Do you own any metals in your portfolio?
Do I own any metals in my portfolio? I love gold, and I don't own it. I think people should own gold. I'm a big fan of gold. I think Bitcoin is just a more efficient way to gain that exposure. But I understand your point. In the event that the internet goes out, you can't access your Bitcoin. That's just true. And that is a risk. It doesn't go away. Once the internet comes back, your Bitcoin is still there and the network will restart. And it would have to be a global network outage for that to happen. But yeah, in the event of that, I would just sit tight and
like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.